It's Max here from Daily Market Movements, and just before I start today's video, I just want to make you all aware of a trading signal service that we provide here. If you would like to receive trading signals from either myself or the rest of the team here at Daily Market Movements, then you can do so simply by visiting our website www.dailymarketmovements.com. What I'm going to do is leave the website link below this video in the description, so if you are interested in joining our amazing team, then all you have to do is simply scroll down, click on the link, which will then take you to the website, where you'll then see that we charge a very small fee of $199 for a year's membership. So great value for money. However, in front of me is a Nasdaq 100 futures chart, and as you can see, we've had a volatile session in Wall Street today, and I think we've seen some profit taking. We're coming now towards the end of June. There's only a couple of days left in the month, I think, up until next Tuesday. And also this marks the end of the second quarter of 2020. So why is this important? Well, this is important because now loads of managed money firms such as hedge funds and banks, they will be taking profits off the table in second quarter to make their portfolios look nice and healthy for their clients. We've had a huge run over the past two quarters. Well, over the past quarter and a half since March, as you can see, and hedge funds will be wanting to cash in these profits at this price here to make their portfolios look extremely healthy and to make their clients very happy. Back in March, their clients would have been biting their fingernails, but now they'll be over the moon as we're now trading at all-time highs. So I do expect to see some more downside and some more pressure on the Nasdaq 100, like we've seen today, until Wednesday. So obviously, Wednesday is the first day of July, and that's when I think that these managed money firms will come back in and place their investments and put some money to work for the next quarter. And towards the fourth quarter, so towards the end of the year. In yesterday's video, I drew up this box. And as you can see, this marks the all-time high up at 10,300, the top side of this green box. And towards the bottom side, I said if we broke below this blue box, that would then trigger a sell-off down towards the 50-day EMA at around 9,500. And as you can see, we found support perfectly at where I drew the box, absolutely perfectly. And as you can see, since then we have pulled back and we're trading above 9,900. As long as we're trading above 9,900, I feel comfortable. If we get a daily close below 9,900, that could potentially mean some more downside pressure to the extent where we could potentially go and test a 50-day EMA at around that 9,500 level. But if we can get a daily close above 10,000, then great. Then I think, throughout next week, we will slowly grind back towards that 10,300 area. We just need to get the obstacle of the month coming to an end on Monday and Tuesday out of the way, as I mentioned before, where we could potentially see some pressure. But even if we do break to the downside, which is, I'm not saying that it's not going to happen, because it could potentially happen, but even if we do, that's a great news, because that then means that we can then pick up a Nasdaq 100 for even cheaper value. So if you're not yet in this market, then that would be great news, because you could then place some long positions down at 9,500, targeting towards the all-time high. That's 800 points to the upside in the Nasdaq 100. So either way, there's great money-making opportunities. My now long-term target is 11,000 for the Nasdaq 100. I think we will get there before the end of the year, and my shorter-term target is 10,500. And I do expect to get up to 10,500 rather quickly, with the Fed pumping in all of the money that they are at this moment. It's unprecedented times with regards to the Fed, and all these stimulus packages are pumping money back into, they're also buying back corporate bonds. So this is very supportive for the stock markets, and every single dip that occurs is just to be bought. We had this massive sell-off about 2 weeks ago on the Thursday, where everyone thought it was the end of the world. We thought, oh my God, the Nasdaq's going to go back down and retest the lows back in March. And I was like, chill out. No, it won't, because the Fed is supporting the market. Not to be offensive, but there's a lot of retail investors out there now as well. People who are new to trading, and not many of them, the truth hurts, but not many of them actually know what they're doing. All they know as of March is that the markets just go up, and they're right, they have been. So every single dip that occurs, these retail investors, your average mum and dad investor, they're just stepping back into the market and buying up these stocks when they have down days of around 3 to 4%. So every dip right now that occurs in the stock market is to be bought. Also on the RSI, we're currently at 56, so we're nowhere near overbought, and still have plenty of territory to move to the upside, which will give us that break back towards 10,300. I'm a buyer. I have no interest in short this market. Buying with dip strategy works. Long-term and short-term target is 10,500 and 11,000.